Good day to everyone. Welcome to the final session of day number 2 of Emerge Live. My name is John Thompson. I'm the Chief Program Officer here at the Financial Health Network, coming to you live from Kansas City. I am joined today by Abbey Wemimo, the co-founder of a company called Esusu, which describes itself as a mobile platform designed to empower its users to better save income, access larger sums of capital, and build credit and financial identity through community-based savings. We're going to have a conversation today about leveraging fintech data to uplift vulnerable communities, but we may get into some other things given Abbey's personal and professional background, as well as his unique perspective on the communities that Esusu is trying to serve. Our quick 30-minute conversation wraps up a series of sessions around today's theme of looking ahead, an integrated financial health system for all. So Abbey is joining us from New York today. Welcome, Abbey.
Thanks a lot for having me, John. Very, very excited to engage in this dialogue.
I am looking forward to getting into some of your thoughts about the role of data and how we can use data to affect outcomes for the people that we hope to serve. And I want to talk a little bit also about your company, Esusu. But before we do that, I wanted to give you a chance to introduce yourself, talk a little bit about your background, what has brought you to this point, and how you think that may be helpful to you as a leader, as a founder, as a person of impact.
Thanks a lot once again, John. I started my journey in the United States. I was born in Lagos, Nigeria. Grew up humble backgrounds, lost my father at the age of 2, had the opportunity to come from average 78-degree weather to negative 22 degrees in Minnesota. It was very cold, and I came to the United States for study in January. It was such a character-building experience, starting my career working for President Obama's re-election campaign in the northwestern region of Minnesota, where the campaign I was trying to represent didn't quite reflect the values of the folks we're sharing the ideology with. But that taught me a lot of things. It taught me to listen to people that are different than I am from an ideological standpoint, and then from a philosophical standpoint also. So fast forward, I came to New York City for graduate school, started a company really focused on open data on the African continent with the former chief technology officer for President Obama. That company was acquired. I went on to Accenture, PricewaterhouseCoopers, and Goldman Sachs. PwC was really focused on mergers and acquisitions. So what happens when you buy, sell, or separate a company? Particularly when it comes to Esusu, my journey to the United States and what made my co-founder and I start this company was really due to financial marginalization. When my mother and I came to the United States, particularly in Minnesota, we walked into one of the biggest banks to borrow money. We were turned away because we didn't have a credit score or a financial identity. We walked down the streets and borrowed money from a payday loan lender at over 400% interest rate. In addition to that, my mother sold my father's wedding ring so I could get a fighting chance in this country, because as an international student, you don't get financial aid or the Pell Grant. So we built Esusu on a simple premise. Regardless of where you come from, the color of your skin, and even your zip code shouldn't determine where you end up in life. So that's a little bit about me.
I really appreciate you sharing that. And the concept of financial identity, I know, is essential to the work that you're doing at Esusu. And it's also been, I think, a big part of the conversations that we've been having in particular today at the Emerge conference. So we've got to come at this from a few different angles. But I wonder if you could tell us a little bit about what Esusu is, what it's designed to do, what its role in the financial services ecosystem and the financial health ecosystem is. Just talk a little bit about that as well.
Thanks, John. So at Esusu, what we do is really simple, and our core belief is we want to use data to better humanity. The question is how. Our core focus today is to help people save, but particularly our business has evolved into capturing rental data and then reporting it into the credit rating agencies to help people establish or build their credit scores. You might ask, why is that important? 1% of rental data are reported into the credit rating agencies today. And then for the communities we care about, particularly the Black, Latino communities, 65% of this population rent. And that's a derivative of some historic marginalization which we've experienced in the United States. Number two, if you have a poor credit score, it can cost you over $250,000 in interest over your lifetime. So we asked our user base and said, look, what's the fastest way to actually have the biggest impact in your life? And the answer was profound. Help me improve my credit, because I don't want handouts from the government. I want a fighting chance. And that's what we do at Esusu. Help people improve their credit, see credit as an asset, so we can continue to help them pave that permanent bridge to financial access and inclusion.
I appreciate that. Do you see yourself as a service that's used directly by consumers, or are you planning to build a data platform for consumption by other organizations?
That's a great question. Right now, we have built a platform where different stakeholders can participate and engage with us. On the saving side of the house, we've opened a platform to big institutions, community-led institutions that have financial opportunity centers across the United States to be able to leverage the technology we've built. What we do know how to do at Esusu is build outstanding technology that folks that are in the community can leverage. We don't know it all, and we're not trying to be the jack of all trades. So we're unlocking our technology so folks can engage. And number two, when we think about the data from a saving standpoint and a rental standpoint, it gives us an end-to-end view. And then the combination of that data, and when we present it for things like underwriting or financial access, it becomes second to none. And that's the kind of vision we set out to do, to really make sure folks see this as an opportunity to build a more buoyant and complete financial identity.
Okay. So talk to me a little bit about the interplay between the rental data that you are collecting, and you talked about, and your website talks a little bit about Esusu also as a savings platform. How do those two things connect, and why is that important, both for you and for the people that you're serving? Stakeholders, I mean both individuals and platform companies that want to use your data.
That's a great question, John. I'll answer that question with a story. So my mother's a very good friend in Minnesota also moved to the United States with no credit score. And one of the biggest things she wanted to do was put down a down payment on a home, because when you come from places like Nigeria and predominantly immigrants, you're scared of the concept of debt. So there's a lot of education there. So what they usually do is a collective of women, they save money together and take turns withdrawing that capital. They were actually one of our biggest use case when we started Esusu. So they were able to save, close to $35,000 just rotating capital amongst themselves. But then something bad happened. So answer caller, what happened was she had a medical emergency. She didn't have health insurance, unfortunately. A majority of that cash went away. The question for her now was, how do I get access to cheap capital? Because they're actually scared of being indebted to folks. Very common in immigrants community. So when that question was posed to us and majority of users, it was really simple. It was, how do we create a system for folks to have the right financial identity so they can get access to good financial products? So the continuation of our products from a saving standpoint, if people have enough cash, they will save. But the issue is the income is just not sufficient right now. So what happened to my mom's friend is she had to get cheap capital. And the options that were only available to Auntie Caller was credit card, but she needed something liquid, and payday loan was an option. That is the same thing, the same experience we went through. That shouldn't be the status quo. Just because we can underwrite people and get the right data, we can't stop there. It is not good for the society, and it's not even good for the American economy at large. So what we thought about at Esusu, really simple, was, look, if folks can save, let's report that data and help them establish a credit score. If folks cannot save, let's take it a step further and think, what are the current things they're doing in their lives that we can capture the data, report into the credit bureau. So when they walk into a bank, they're not turned away. The banks don't lose trust. And today, John, there are over 40 million people in the United States that don't have access, they have a thin credit score or no financial identity at all. Imagine, and the average debt in the United States is $135,000, including mortgage. Just imagine if we do that simple math, 40 million times 135,000. That's $6 trillion in capital. That's not just a good thing for the American economy. It is a profitable thing for the American economy. And that's the way we need to think about the population we're trying to serve. We're not just trying to prove a charity case. We're trying to make sure people like Anti-Collar has a fighting chance and makes America, continue to be a more profitable scenario. So that's what we're fighting for. And that's why we think an end-to-end platform from saving to credit building isn't just the standard, but should be the standard people adopt.
I want to come back and get in a minute just a little more of your perspective on kind of what your the communities that you're trying to serve are wrestling with and sort of the state of affairs in this country today. But I did want to just double click on the platform concept that we talked about, that you talked about. There's a bunch of technology platforms out there. There are a bunch of sort of incredibly large, complex, and sophisticated organizations that are providing data to financial services providers. Why is Esusu necessary? What is it that you bring to the market that others aren't delivering?
Great question. I'll give you an example, John. I love telling stories. The best way to answer this question is really with stories. So let's take, for example, our rental platform. What happens on our rental platform, our rent reporting platform, is we work with large landlords or any landlord, capture that data and transform it. And I'll speak to our 3 core value proposition. When we capture rental data and report it, it drives on-time payments. And then we're also able to see risks data and make sure folks are not kicked out. So let me juxtapose and be very, very clear. Number one, when you think about the traditional institutions, the way the financial sector is structured today, you have the folks that are either moving capital, you have the enablers in the marketplace, or you have the neo institutions borrowing someone's fiduciary identity to make transaction. Well, the way we see ourselves as an institution is really unlocking capital and that enabling bucket. And why Esusu is different is, imagine, John, you leave, you're a landlord, I rent in your building, you're helping me report my data with Esusu, and for some reason, I lost my job. Esusu has access to that information and can predict the risk, but it doesn't stop there. Esusu is not trying to make sure Abbey gets kicked out of John's building. You know what Esusu does? Number 2, Esusu connects Abbey with an affordable interest loan on an average 0 to 5%. So Abbey can get access to that loan, pay John, so Abbey doesn't get kicked out, and we're not solving homelessness backwards. That's the kind of solution we're thinking about, and that's our difference. End-to-end solution, not just taking a piece of the pie, because you can't just solve a part and leave the rest. You need to think about the end-to-end whole solution. So that's how Esusu differentiates itself. It is not just stopping and reporting data. It's leveraging that data to just make sure the outcome, which is equal financial access at a cheap rate, and particularly on our rent reporting products, homelessness, is drastically reduced, and that's what we're able to control. So the standard in the market, there are a lot of good players doing good work, but it's just really focused on one thing. We think, particularly at Esusu, we can't just stop at one thing for dealing with a particular population.
I appreciate you sort of bringing the context or the concept, I guess, of outcomes into the conversation. And I think, that's one of the things we've been really working with the markets and with our members to think about. How do you design for the outcomes in mind? How do you build for those? How do you measure yourselves to those? I'm going to throw like a super technical, tactical question at you that's COVID specific at the moment, and then we're gonna pull back a little bit. But I think this is something that many of the people in the audience today, the virtual audience today, have been asking about. So the question is from the audience. How are you dealing with COVID-induced rental deferrals or delinquencies in the context of reporting to credit bureaus? And if you want to expand on that and think about the broader implications, please feel free.
It's a fantastic question. So let's start from step one. What we did when COVID happened, for all the landlords we work with, we have now close to 200,000 tenants in our ecosystem. What we did was checked on our landlords, number one, and say, what's the game plan? What are the biggest needs you have? One of the striking things, and from the data we have access to from the property management software company, where 65% of folks in our ecosystem will not be able to meet their rent obligation. Moratorium or no moratorium, everyone suffers. The landlords can afford his or her mortgage. And then the renter is at risk of eviction after the moratorium. So that's a background. What did Esusu do? What we did was create a rent relief fund, went back to our impact investors like Acumen America, like the Global Good Fund, that really invested in us due to the work we are doing, to really focus on giving folks a fighting chance, particularly with our financial identity. And we went back to our landlord and said, hey, we've raised the rent relief fund. Make sure people do not get kicked out. We're going to step in and pay rent on their behalf. So what we've been able to do is keep folks in their homes, and in some cases, taking it a step further and negotiating with landlords and saying, if we pay this amount, after the moratorium, promise us you won't kick them out for additional 2 months while we find other services. That's a tactical way to leverage capital and really have an impact. So let's address some of the questions that came from the audience. Number one was really, how do we deal with reporting? Thanks to the CARES Act, if you have any financial shock associated with COVID-19, we have a special code agreed to by all 3 credit rating agencies that it's not going to affect your credit score, provided you reach out to us. And if you don't reach out to us, we have a huge customer support team that reaches out to you because there's a lot going on. And we take that step, and we think it's a fiduciary responsibility, not only for our shareholders, but for the people we serve. And we don't take that for granted. And then when rent moratoriums end, my answer is we need more Esusus, right? Look, what is up? We have 62 million units in the United States. There's a big article came out from the Washington Post and Political that said 82% of folks that will be affected when rent moratorium ends are African Americans and Latino population. And if you take a step back, the 18% are white, but let's figure out where the white folks are. And places like Grafton, North Dakota, places like Mahnomen, Minnesota, in places where, in all reality, in our dialogue, we've forgotten about. So, poverty doesn't necessarily know color, but it disproportionately affects a certain class. So what we've been able to do and what we continue to clamor for is we need to find a solution that does not necessarily victimize the landlord, but we need to find a win-win solution like companies like Esusu have figured out, where we get landlords paying their mortgage and continue to employ folks, and we keep the renters, the people we care about every day, in their homes, because that's the right thing to do.
I appreciate you mentioning that. I think there's a couple of themes from some earlier presentations that carry forward into what you're talking about. Matt from EarnUp talked about the role of in partnerships of making sure that you think about the experience that each sort of stakeholder in that partnership has, both the people, the companies, so on and so forth. And then Michelle from MMI, who spoke just a few moments before us, talked a lot about some of the barriers that people face when they're approaching a financial crisis. In this case, she was talking about disaster recovery. Obviously, we're in an interesting kind of disaster at the moment, and how that can be a really important teaching moment, and how you can invest in the people that you're working with to help prepare them for the future. So I've got one other audience question that I want to get to that's fairly tactical before we sort of zoom back out to finish our conversation, Abbey. So the question is this: if a property manager uses your services, do renters get to opt in or opt out of having their rental data reported? For example, if someone is typically late on the rent, they may not want their data reported. Is that something they control? How do you do it? And I think it'd be interesting also to hear, how do you think about that as a business question, as a customer focused question?
We have a very intelligent audience, and it's really exciting to get the tough questions. So when we think about what we do at Esusu, we leverage the letter of the law to benefit the tenants we serve, particularly in this case. So what we're able to do from an opt-in standpoint, so our standard operating procedure, the question's answer is really, it depends. If you're a market rate landlord, you can opt in to have everyone report data on the Esusu platform. And then we watch for folks that miss their rents in an effort not to hurt their credit score. They have an opportunity to opt out of the program and say, hey, I don't want my data reported. And that's in accordance with the Fair Credit Reporting Act. But if it's public housing, we're mandated by law, particularly the 1974 Housing Act and other privacy acts, to make sure folks can opt in before this data is reported. So our system actually uses a text message approach and say, Esusu is going to report your data to improve your credit score. You get a text message, do you want to opt in? Yes or no? You click yes, you type yes, we get that data, and now we're able to report that data on your behalf. If you say no, you're respectfully disenrolled and none of your data will be reported. So that's really the power of what we're doing. And we're able to treat the opt-in basis. And then for folks that are auto-enrolled at the request of their landlord, predominantly private housing providers, if folks miss their rent, we're going to reach out to them and say, you have this option by law. And that's, from our vantage point, it's the difference between the letter of the law and then the spirit of the law.
Appreciate you going down that rabbit hole, a small one. I did want to take a little bit of a step back, and I think this is a unique moment of learning for many of us in this country. You and your team are doing this work at an incredibly chaotic time. You're building systems and processes and tools that are designed to change the way that the sort of functional systems in this country work. And I think we as a community are finally starting to hear some new voices around generational issues of racism and exclusion that are in many ways embedded in the roots of the country. And the financial health of people and neighborhoods and communities are, of course, deeply connected to this. As an organization that's focused on systems change from the inside, and as a leader from your background and a leader in this section, I'm just curious about hearing your perspective of sort of how things are playing out in the communities that you're working with, and how you take either inspiration or learning or want to affect the narrative in this particular country right now.
It's a powerful question, John, and the data we see every day is not encouraging. The reason why we find ourselves at this inflection point in this time of history, in the dialogue we're having, in my opinion, it's a symptom of a larger disease that went back through the original sin of this country, which is slavery. And then that was exacerbated by Reconstruction, Jim Crow, and then fundamental discrimination, particularly from the Federal Housing Authority, discriminating against African Americans and not getting access to financial products. Hence why we have the big wealth divide, whereby a white family has 10 times as more wealth than a black family. So we all know this fact. The question is, where do we go from here? From my vantage point, some of the things we're saying, and when people fill out their rent relief form, we ask them to create just a free-form text of what's going on in their lives. And one that touched me, and I cried myself to bed, was essentially a family of 5. This mother of 5 earns $722 every month. Service employee got furloughed and now can't afford rent. In a just America, that shouldn't happen. In a prosperous country like we have, the most successful country, the richest country on the surface of this earth, That shouldn't happen. So we need to really look inward and use this point as an inflection point. And whatever is going on, particularly with COVID and the uprising from the people that have been left behind, our people, is just a symptom of that larger disease I talk about. So where do we go from here? Some of the ideas I think we should think about is for folks that have a thin or no credit file, we need a $2 trillion plan that gives financial institutions and other fintech lenders an ability to lend to these people. And that $2 trillion is loan loss reserve fund. If John, you don't have a credit score and we don't trust you, let's presume innocence before guilt. Let's give you access to financial products, and the government should step in with a loan loss reserve fund. That's how we can level the playing field that we've fundamentally disrupted from the federal housing discrimination and other disease we're dealing with from slavery. So that's one of the biggest ideas and one of the things we need to think about. Number two is just collaboration. We need fintech providers, we need folks working in social services. The Financial Health Network does a great job with that, with the nonprofit exchange, bringing fintech providers and then folks working in nonprofits to really bring us together to work hard to solve particular problems. Then we need the governments to step in also, because it is just, there's so little we can do without the government setting the record of what needs to happen and the government spending a lot of capital. Let's think about what just happened. What I'm introducing is not radical. It's just $2 trillion. We've released, it's funny, John, but we've released $7 to $11 million in free cash, zero interest cash for corporations to lend. The Federal Reserve Bank is buying up junk bonds and then commercial paper. Think about that. That's $7 to $11 trillion. In these United States, we've opened up the bank and folks can just come shop at zero interest. Why are we not doing that for our people? Why are we not doing that for people we've left behind? If we want to right the wrongs we've experienced, it's time for us to stop nickel and diming and bet on our people, because every time we've bet on the people of these United States, we've continued to show that we can be the best and stay the best and show the world that we can really prove the soul of what this country stands for. So the data I see every day is not encouraging. Collaboration will take us a long way. And I'm really confident that the best is still yet to come, only if we do the right things.
I think I want that to be the last word of the day. Abbey, thank you so much for sharing your time with us, for sharing your perspective and insights with us. This set of conversations today were really focused on the future and on the opportunities and implications of a more integrated financial health system that has inclusivity and equity and fairness at its core. And I think you really brought the concept to life in a way that I think can hopefully inspire all of us to continue learning. For those of you in the audience, please continue to follow Abbey's work at isusurents.com. You can also follow him on Twitter at Wemimo11 or at @GetEsusu. Thank you again, Abbey. Have a terrific day, everyone.
Thanks a lot, John.